Where the fund flows are heading after the Liberation Day tariffs announced on 2nd April. In this video, we examine how the US and Chinese market have responded since then, focusing on the meltdown and rebound across both their stock and bond markets. As an investor, I will avoid sentimentality when forming my views. I do not wish to take a stance biased towards either the US or China, as that could easily cloud my investment judgment. My goal is to remain objective in my analysis and identifying the underlying fund flows in the market, especially in the light of this highly volatile geopolitical situation. I'm Con Hao. My work in this channel is to study behavior science and finance, discover correlation between different markets, and uncover potential opportunities. This analysis is based on technical studies and does not constitute financial advice. Please consult your licensed broker before investing. Following the announcement of the Liberation Day tariffs on 2nd April, the Nasdaq dropped 16.1%, while the China A50, that representing the 50 largest A-shares companies in Shanghai and Shenzhen, fell 11.6%. This suggests the US market was hit harder than China. Both markets bottomed out on 7th April, then rebounded after President Trump extended on the 9th April tariff deadline by 90 days for all countries except China. Other US indices saw similar decline. The S&P 500 fell by 15.1% and the Dow Jones dropped 14.3%, steeper than the China losses. Instead of focusing on China blue chip stocks, I also want to examine the broader market, including the small cap companies. Through the SSE Composite Index, which tracked all listed stock in Shanghai, it declined by 9.6%. Overall, the tariffs have had a greater impact on the US markets than on China. As of 7th of April, both markets have rebounded, though the Nasdaq shows a more volatile recovery compared to a steadier rebound in the Chinese equities. Let's now look at the government bonds markets, which serve as a key indicator of fund flows. Bonds reveal where institutional investors are placing their capital. By purchasing government bonds, they are effectively lending money to the government in return for interest, with the principal repaid at maturity. A raising bond prices usually reflect a growing investor confidence in the borrowers, driven by strong demand. After the Liberation Day tariff announcement, US bond prices declined while the Chinese bond gapped up and moved higher. It's worth noting that the US bond didn't just start falling after 2nd April. They had already peaked in 2020 and broke below their long-term uptrend in 2022. I will dive deeper into the US bond prices and its trend in next week's video. What do you make up of these price movement across the markets? Where do you think the fund flows are heading based on this behavior? I would love to hear your thoughts. We cannot perfectly time the market, but it is possible to get the market timing right. The market are always telling us on their next move. Stay tuned for my coming tutorial. Remember to subscribe to my channel. Join us in our weekly case study and discussion. Click on my profile icon or description below to find out more. Feel free to leave any comments below. I love to exchange ideas with you on what is about to come. Really happy that you stayed through this tutorial. You have many great trading weeks ahead.